since January, I have grown my portfolio by 16.85%, crashing the market, which is currently down 12% from its February peak. But before we dive in, here is a quick disclaimer. Trading and investing comes with risks. So this video is supposed to be taken for educational and entertainment purposes only. Always do your own research and due diligence before making financial decisions. Now let's break down how I have been trading, the strategies that I have been using, and key lessons I have learned along the way. And if you find value in this video, please hit that like and subscribe button for more market insights. Let's go. Now, let's talk about numbers. I started this trading account I opened it in December. I've said it around, I think 16 or so December 2024. But I started actively trading in this margin account as of January 2025. And the capital that I started with is $21,484.09. Fast forward April 3, I have grown this account by 16.85%. Now, if I include the money that I withdrew, it's more than 18%, right? So that's a solid return, especially considering that the S&P 500 is down 12% from its February highs. That means I'm outperforming the market by about 28%, 28.85%, such a massive margin. Now, I know markets are very unpredictable, and even Warren Buffett says, you don't know what tomorrow will bring. That's why managing risk is key part of this trading journey. You might be successful today, but if you let your guard off, then you might lose even all the profits. So let's break down the strategies that I've used. But let me show you this account so that you have an idea. So quickly, you can see this was what I showed you if you checked the video from last year, and this is the capital that I've invested, 21,844, and I withdrew $359.90. But you can see that I currently have cash 13,367 Canadian dollars, which is about 53% of the portfolio. In my total equity, you can see this is about 25.1K. But you can see that this account has been growing up and down in a roller coaster. But the cool thing is that my return is 3,620, which is like in this case, you can see that it's almost, I've made almost 4,000 from this, right? If you include the money that I withdrew. So that's a very good thing, because if I'm looking at this capital, it's a good return on capital, but these are the current stocks that I hold, and I'm going to explain in a bit. But I just wanted to show you that I have 10 contracts of SOFI cash secured puts that expires on April 11th, and the strike price of $10.50, and I collected premium of $240 for these 10 contracts, and I have 100 shares of Walmart, and I got a premium of $53 for the covered call that I have, and my average is $85.98. And today you see that I did these trades and I made $131 US dollars, and this is cool. I've been trading using vertical put spreads, vertical call spreads, and secured cash secured puts, which are some strategies that I'm going to explain in a second. Now, I would say the first thing is that in terms of what a cash secured puts are, and for this case I took for SOFI, it's one of my favorite strategies because I use a little bit of capital, even though I should have that money for the full position that I take. Let's say SOFI in this case is 10, my strike price is $10.50. That means I should have 10,500 in the account for the 1,000 shares that I have. But I collect $240 in premium upfront, which is my income. And if SOFI stock closes below $10.50, I might be assigned those shares, but I'm fine holding them, right? I've explained it in the video. But if it closes above, I keep the premium. So if I do that every week and I can collect that amount, that's another strategy that I'm using. But the most important thing is I'm writing these cash secured put contracts because it's like while I am waiting to buy the stock at the price that I want, in this case, I want to buy it at below $10.50, I get paid. So basically, there's the other side of the trade to say someone who may be holding, who is holding the stocks, the shares for SOFI, and they say, okay, if this stock drops maybe below $10.50, they want a fixed return. So even if SOFI now drops to $8, it means I would be required to buy it at $10.50. That's making that loss in that case, right? So I really want to do cash secured puts when the stock really pulls back, right? And I usually use the Bollinger Band. And when it pulls back, I take the position only on stocks that I really understand and I would want to hold. So that's point number one. Now, for the case of using the Walmart case of using covered calls, I have the 100 shares for Walmart, but I've already, in this case, it's in the money. So if it closes above $87, I will still collect the $53 premium if I wait and not close the position. I would make $53 premium plus the $102 profit, because if my cost basis is, my average cost is $85, $98, and my strike price, if I would sell at $87, I would make $2. So I would still have made a handsome profit. But remember, I had this position. I think last week I already had this share, so I was collecting premium and they were not called away. So what that means is I've already made, in this case, almost more than $200 on this, whilst still holding the shares. Now, why are covered calls great? I get paid whether the stock moves up or down or sideways, as long as it doesn't go up beyond the particular strike price that I will have chosen. Now, I'm using vertical call spreads to manage risk effectively. So what are vertical spreads? Basically, if I'm bullish, I use vertical call spreads. If I'm bearish, I use vertical put spreads, right? And this strategy limits risk because I get in knowing exactly the quantity, the amount that I'm risking, and my reward in that case, potentially. So that is cool because I get to do things that have quantifiable risk. And I've explained what are vertical call spreads and vertical put spreads, and I'll put the video here so that you can also just watch that and I avoid repeating the same content that I have done. But now, as these market conditions change because President Trump announced the tariffs, reciprocal tariffs globally, with countries like Vietnam getting a hit, China as well getting a hit, and I'm going to do a video actually about the market updates. This is just for the trading challenge. But right now, the market is volatile. The S&P 500 is down 12% as I was recording this from its February highs. That is a major drop, but volatility for me, it creates opportunities. And the key is to stay disciplined and managing risk. And here is how I do that. Number one, I hold cash. Even though it's tempting to be fully in position, having cash gives me the advantage of taking advantage if the market drops or there are opportunities that Mr. Market presents to me. Currently, I have 53% of my portfolio in cash in this trading account that I'm using. And I like to do position sizing. I don't want to risk a lot of money. I never want to risk a lot of money in a single trade, right? So I want to take my calculated risks, and I like to diversify, like I'm using different strategies. But you see, I'm playing SOFI, I'm playing Tesla, I'm playing Nvidia, I'm also playing other stocks like Walmart, right? So at the end of the day, with the tariffs that are kicking in, people still want food and all other things. So I think Walmart is a solid bet, but they also get some of their products from China. So I'm thinking probably China, if they retaliate, there might be that potential risk if there is that reciprocation of the tariffs. Now, as the great Warren Buffett likes to say or says, the thrill of investing and trading is that you don't know what tomorrow brings. But that's why I like to stay prepared, informed, and managing my risk wisely. Now, as far as this trading is going, I like to be thankful that at least right now I have almost 17% return, right? 16.85% excluding the profit that I withdrew while the market is down 12%. And even though this is exciting, I want to keep rolling this, compounding this money, and hopefully we'll see what the market will offer to me. So for now, that's it. I wanted to share this with you. If you found this video helpful, hit the like and subscribe button for more real-time market updates and strategy breakdowns and live updates. And don't forget to comment below, what's your favorite trading strategy? Are you using options in your portfolio? Let's discuss in the comments. Until next time, trade smart and manage your risk, and may the markets be on your side. Bye-bye for now. Thank you.